Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we are going to talk about why invest in XEI.to ETF. So I do most of my stocks trading and investing on Questrade, and today the investing part is why do I invest in XEI.to as for dividend investing for now. So why would you want to hold this XEI.to for a long time or maybe for life? Why would you want to do that? So have you already bought yours yet, or you will learn today and then maybe go and buy ETFs of XEI.to? And if this video makes sense, please comment, subscribe, and give your opinion on how I present it. And if you're new to this channel, please subscribe for more videos, and I will appreciate your business. I'm appreciating your support already, and continue watching as we go through XEI.to. Why will I buy it and hold it for a long time? So there are several reasons why we like the ETFs. Most ETFs are exchange traded fund because they are made up of many securities, which give you that less stress because they are less volatile, and they are also secure because they are less risky than the individual stocks. So these are exchange traded funds. So it's already stick into your head at this point that ETF is exchange traded fund. It's made up of many securities, which make it less risky. So, but how do you use it? Most of the time, I use some ETF for swing trading, depending on how volatile the price is. If the price move all the time and it's low dividend, and then I use it for swing trade. And if it's less volatile but dividend is more, they pay more dividend for an ETF, and then I use that ETF for dividend investing. So it depends on how I look at it. So some ETFs are used for swing trading, others are used for investing. So for today, I'm using it for investing dividend purpose. So XER is one of the things that one of the ETFs that I've been using since I started the journey of investing or trading in the stock market since 2021. So I have been using this ETF. So I have some experience of how sometimes is less volatile. It doesn't move that much, but you always get that the ETFs pay dividend every month. Okay, so that will be one of the reasons why I invest in the XEI.to, which is in full the iShare, the composite S&P Composite High Dividend Index. So this is the full name for XEI.to. So it tracks like almost 50 to 76% of these companies. So it tracks them and it pay high dividend. Maybe you will consider not high, but for me, I feel like it's high dividend ETFs, right? So we use it for dividends investing in my case. So, and the reason is they pay monthly dividends. So that's the first reason why I invest in XEI.to ETFs. They pay monthly a dividend, which is around 10 cents. 10 cents per share. So, and the price is not that expensive too. So the price of the share is not expensive. So if you get 10 cents per share for the price that is lower, and then you're getting the value from these ETFs. So let me show you how you see the dividend that you are getting paid when it comes to ETFs. We're already logged into our account, and I will show you how you you can see this. So this is like my new ETF account that I want to build for now. So I own XEI.TO quantity of 10, and it costs 270.6. So this one, it was two transaction that I did. I bought four first and then six. So the six were bought when the price was lower. So the total amount that is cost at the market value is now 270. So if you add $2, that is now showing as loss here. So it will be the cost of the whole shares were like 272 and 92 cents. So that's how much it cost me. So the purpose of this one is to get dividends. So let's see how much you will get when you have 10 shares of XEI per month. So it's something that need patience. So it's not, it will grow all at once. Once you have, you need quick money. So it's for people who want like long-term growth and they want to keep it for life. So and see how will they be handling like 200 or maybe 500 from XEI holdings for quite some time if they keep doing what they are doing. So XEI.TO. So now you see the price is 27.06 at this point. It reduces. So what happens sometimes when the price goes down, the dividend amount that they pay is going up. So at this time, maybe they increase the amount or it's because of the price fluctuation. So you see here, so you will earn $2 a month for holding the XEI 10 shares. So you see it's increased, it already increased. The last time I bought it, I thought it was $1.09. 9 cents because that's what it was showing. So today is different. Maybe they have increased. Some companies they increase the dividend once they are doing well. So this one is 2.3 is 23 cents per share a month. So that's what you will be getting and the more you invest, the more money you get. So it's $2 now that I'm getting a month for holding XEI.TO 10 shares. So that is just way too high than what the banks can give you, because most of the time that $2, if you're handing it at the banks and it's not in your TFSA account, you still have to be taxed. There is also fees that you have to pay. So, but this one is in your TFSA account, is sequestered. You are the one directing your investing. So you have no fees that you have to pay here, maybe very small fees that are used to manage the fund, which is very small. So it doesn't really show on your dividend that you had anyway. So that's how it is. So let's say if you have 100, so if you have 100 shares of XEI, it will like give you more of the dividend a month. So this is where you check the dividend that you get. So we already checked like it pays monthly dividends, and I have shown you for now XEI give you 23 cents per share a month. Okay, so if you have 10 shares, you are getting $2.30. So the next point is the low cost. So management fees is very low. Most of the time it's range from 0.05, or it depends on how much it costs. Like it's very low. You will not even really sense it when you are getting your dividend pay. Management expense ratio too is also very small. So they are lower than the one that the banks charge when you are saving your money in the bank. So the next thing is the next point is it is designed for a long-term holding. It's like it help you diversify, it help you get dividend over time. It's not that volatile. It's not for you to really get money quick and all this thing. Is something that you have to build with patience, and then you start handling your money every month. So now I already handing $2, which is for free. I won't be doing anything. I get $2. If I add another $10, 10 shares, it will cost me 400, 500, approximately 500, but I will be handing $4.60. And then again and again, as I repeat it, and the more price goes down, the more you buy more. So you buy more of that, buy more of that, and you would easily build passive income doing that over time. So they are designed to be long-term foundational holding. So the next thing we go to the holdings, which is the most important, because this one gives you confidence that this company is stable because it's made up of this. So these are the part that make up the X's. XEI.TO. So the part that make it. So if the parts are weak, and then maybe the fund is also weak. But if the parts that make up XEI.TO are strong, and then you know this is a very stable fund, and you will be comfortable holding it as you collect your dividend. So it's made of 50 to 76 stocks from S&P and TXX Composite Index. So these ones are the holdings. And for you to know if your fund is well diversified is when you look at the companies that make up these ETFs, and they come from different industries. Some come from energy industry, some come from financial industry, some come from utilities, health industry, and all those stuff. So if they are well diversified, you know that it is stable, because sometimes a factor can affect one industry and will affect most of the companies all at once. So you have to see that diversification. Let's look at the holding now and see what companies made up this fund. So are they famous companies? Are they stable companies? What are these companies that made up this fund? So, and this will give you peace of mind. You know, these companies are doing well. These companies are doing this, and it's not individual investing, individual stock investing. It's ETFs. It's made up of many companies. And for today, we are going to look at the top companies that make up XEI.TO holding. So this top one. So the top part, the top place are taken. They are taken by energy companies. So Enbridge take number one. TC Energy, Toronto Dominion Bank is the financial Royal Bank of Canada, and Canadian National Energy Resources also energy. Suncor is also energy. Bank of Montreal is financial. Nutrient Ltd. Materials. Bank of Nova Scotia is financial, and then Fortis is utilities. So what is happening with this ETFs is there are some ETFs that are more diversified than this one, because this one is mostly focused on financial and energy, which still make it a good fund, because it's not only made up from one industry. It's made up mostly for energy and financial. So those are the ones. So the percentage and the exposure of this fund is also distributed based on the ranking. So the energy companies take the higher percentage, followed by the financial companies, and then the rest is distributed in small amount as you go. So look at these percentages. So they are not really that bad. So financial take 31.9, energy 30%, utilities like those of 40s take 13%, 91. and communication, materials, real estate, consumer discretionary, uh, industries, industrial, I think it's under industrial, healthcare, cash and derivatives, consumer stable. So that is the composition of the XEI.TO as ETF. I hope you learned something today, but XEI is one of my favorite X ETF that I have been using for a while. Sometime like I could buy it, hold it once the price increase, get dividend for some time, and then if I see like the capital gain is at high, I also sell it and get the capital gain too. So you can make both with XEI. You can get dividend and you can also get capital gain over time. So I hope you learned something from this video, and if you're new to this channel, please subscribe for more videos, and I will